Jim, it's been an incredible start to the new year. The events at the Capitol, tragic, disgraceful, saddening, have really been the focal point of the week. But the story of the blue wave occurring at the congressional level really, for many people, they would have thought that the financial markets would have reacted negatively, but instead it's been a very positive week for stocks. Why is that?
Well, Nathan, it has been a crazy start to the year. I think two reasons. You're seeing expectations for increased spending at the federal level, especially for virus relief. And I think infrastructure out of the gate quickly are both pretty additive for growth prospects. And secondly, even though it might not happen in the short term, longer term inflation prospects have gone up. And I think that's been additive for stocks too here recently.
That seems to be counterintuitive that stocks would go up with an expectation of inflation. What might be behind that recent movement?
Well, higher inflation is especially debilitating for bond returns. And even though we believe strongly in bond returns as a portfolio diversifier, inflation makes stocks more appealing than bonds on a relative basis. And I think that's part of what you're seeing here driving returns there.
What about other sectors of the market, like the international sector?
Well, international, especially developed and emerging markets, as well as small and mid-sized US companies, have started out the year really well. And that's continued a trend that's been going on for the last 3 or 4 months or so. Typically, those sectors of the market will lead out of an economic recession when the new business cycle starts. So we'll see if that trend continues in 2021, but I feel pretty confident that we're in the start of a new period there.
What advice do you have for investors for the year ahead?
I'd say stay diversified and buckle up for another interesting year.
Good input. Thank you.